Okay, so let's have a look at incomplete records type B and the steps that are involved in this. So type B, we've kind of got less information from our client, so we've got less steps to work from to complete our balance sheet and our profit and loss. So steps that are involved, we've got 4 steps. So step 1, prepare a statement of net worth or capital to help us calculate the goodwill. So that's exactly the same as we would have done in the incomplete records type A. Step 2 then, make any adjustments for assets, expenses, gains, loans, interest. That's a bit like step 7 and 8 that we did in type A. Then we're going to prepare a balance sheet. So we prepare a balance sheet first, and that's going to help us calculate the net profit. And then we're going to prepare a trading profit and loss account, and we're going to use that net profit to work backwards to help us calculate any figures we're missing, for example, our purchases, and help us calculate our sales figures. So let's have a look at a question. So we'll look at Fuller, 2009 exam questions. You can see the layout is a little bit different. So you still have all your information at the start of the year. That information we use to help us calculate your goodwill, and then we have information down along. So it's not kind of sectioned out in your bank payments or cash payments or anything like that. So kind of it's all thrown in together. So we need to look through this and help calculate the figures to help us do our accounts. So the first one we're going to do is we're going to look at our whatever the start of the year. So we know premises is an asset, stock is an asset, debtors is an asset, 3 months rent prepaid, so that's an expense, we have a prepaid, so it's an asset. Equipment is an asset, trade creditors is a liability, wages due is a liability, and 5% investments at 50,000. So they're giving us our investments here, so you don't need to calculate. So that's going to be your asset. So you're going to add up all your assets together. You're going to add up all your liabilities. You're going to take one away from the other to see how much the company was worth, and the difference then from what they paid of it. So they paid 400,000. That difference is your goodwill. So when you've put in all your assets, so as we said, premises, stock, debtors, rates, prepaid, equipment, investments, and we added them up, we got 430,650. And your liabilities then, we just had creditors and wages due. So when we added them up, we got 36,900. So our net assets, or the value of the company, was 393,750. We paid 400,000 for it, so our goodwill then is 6,250, and that goes into your fixed assets in your balance sheet as a financial asset. So that's your working capital, your first step for type B. Same as for type A, so just calculating what our goodwill is.